G'day folks, and welcome to another edition of the Rough Consensus podcast. Today I've got Murad Mahmudov on the show, and Murad is actually one of the people who helped orange pill me way back in the day in 2018, 2019, just by his deep understanding of why Bitcoin, why its monetary properties are special, and really this idea about it monetizing in its own world, but also demonetizing other assets, things like real estate, stocks, bonds. This was the first time I thought about really relative valuations and how Bitcoin can actually absorb capital from all these other markets. Now, Murad also, alongside Dave Puell, was the inventor of the MVRV ratio, which people who follow the Checkonchain newsletter will know I follow all the time, right? MVRV is such a critical metric. So he's been around the on-chain world, the Bitcoin world for a very, very long time. So I start by picking his brains about what he thinks about Bitcoin and how it's evolved since those early days of 2018, 19, when I first started thinking about it. But more recently, Murad has been getting into the Memecoin cycle. Now, most people listening to this podcast will most likely be Bitcoiners. That's certainly my position. I'm not an investor in altcoins. But what I did want to do is pick Murad's brains about the societal element, because I do think there's a lot of lessons when we just observe crypto and how it all performs and behaves. I think there's a lot we can learn just by understanding human behavior patterns. And in my view, I still like to puzzle over why certain crypto assets are performing, why they're not. I find it an intellectually stimulating exercise. And I do think that what we talk about in this podcast about why these meme tokens are actually moving and why they're actually outperforming most of the rest of crypto, I'm going to call it the middle of crypto, I think it's actually a really interesting insight because it tells a story about human behavior. And if you follow my analysis, you'll know that human psychology and human behavior is at the core. So go into this looking for what can we learn and actually think about how human beings behave, why the markets are trading the way they are, and come at it without a kind of asset bias and just look at it from the perspective of human analysis. So without further ado, let's get stuck right into the conversation. Just before we get started, do check out our newsletter over at checkonchain.com. We do have a charting suite, which has got all of the on-chain charts that I personally use, as well as derivatives and ETF metrics. And over at the newsletter, we actually release 2 weekly updates and a masterclass every single week. And we also have a Q&A that goes on once a month. So if you have any questions, you can always ask, and I will package those up and build it into a monthly Q&A. So do check us out over at checkonchain.com and enjoy the episode. Cheers. G'day folks, and welcome to another edition of the Rough Consensus podcast. Today I've got Murad on the show, and Murad, you actually have been around the world of on-chain data. I mean, really one of the original papers I downloaded was the MVRV piece that you and Dave did. So you've been around this space for a very long time. You've been around Bitcoin for a very long time. Mate, how you doing? And thanks for coming on the show.
Doing really well, and thank you for having me. A pleasure to be here.
So, mate, where I really want to start, I mean, one of the orange pill moments for me was your conversation with Pomp. You did the ultimate case for Bitcoin, and I was very much it's about 2018, I think it would have been, and I was really just starting to understand what Bitcoin was, understanding the monetary system, why Bitcoin actually exists. You've been around this industry, you've kind of seen how it's evolved for a long time. The energy that you kind of were talking about all the way back then, how has that changed? And how has Bitcoin, the way you think about it, how has that changed over the last, 5, 6, 7 years?
Yeah, so I guess a lot of people in the space, particularly from the Bitcoin angle, know me from the podcast I did with Anthony Pompliano in 2018. Not a single one of my opinions has changed since then. In fact, obviously, not to pat myself on the back or anything, but I think a lot of the predictions that I've made back then in October 2018 are obviously slowly coming to fruition, right? But in terms of my view on kind of Bitcoin's monetary properties, its future, where it's headed, why is it valuable? None of that has changed. The price targets remain the same. The vision for the future remains the same. It's just that, global markets and global phenomena, they move at a slightly slower pace than the couple of years that human beings usually think in. But yeah, like I said, my opinions regarding BTC haven't changed in the slightest. If anything, my conviction and my belief has only gotten stronger since. And frankly, I think the probability of all of my predictions coming true has only increased percentage-wise ever since.
It's an interesting dynamic because it really has been like watching the monetization of an asset. And I think that's what a lot of your original thesis was on. It was this, starts as a collectible, starts to become a, people look at it as a store of value, and then finally at the end of that story, you start moving into that medium of exchange unit of account. And it's, I mean, for me, if you told my 2018-19 self where Bitcoin would be on its monetization path today, my head would have exploded, right? So it really has been a pretty tremendous journey. From that kind of lens, I mean, I think some people, in fact, I'd say a lot of people probably aren't overly familiar with your just general framework. For me, I started buying Bitcoin because I understood the debt system. I understood that, hey, this fiat experiment can't go on forever. That's why, as you said, that's a glacial pace type thing. And then you've also got Bitcoin going through its monetization pathway. Do you want to just give people like a snapshot of that, like a summary of what that kind of perspective is and why ultimately it's Bitcoin and really nothing else that fulfills that role?
Yeah. So here's the thing, right? Whether we like it or not, central banks and governments around the world are going to keep printing. There's really no other way around it. Uh, Functionally, they pretty much only have two choices. Either they're going to continue printing whenever there is the slightest bit of discomfort in the economy, or they kind of let the free market take sort of its course, but that would result in a bunch of different crashes and a bunch of like deflationary effects. I don't think anybody wants to deal with the pain of the latter. So the way out, as long as it works for now, is going to be printing by all the governments around the world. They're going to call it different names, different mechanisms, different sort of facilities or whatever. But
Alphabet
ultimately, at the
soup
end of the day,
programs and things they
yeah,
roll out.
yeah, yeah. Yeah, exactly. But at the end of the day, um, one way or another, the money supply is going to continue expanding. Um, and this dynamic is going to have people of all kinds of demographics and of all kinds of like wealth levels. They are naturally scrambling to find a vessel which is going to preserve their wealth, right? Now, I think young people especially, they know that um, other assets like real estate and the stock market, they a large degree of their monetization over the past several decades has been not so much due to the natural demand for those things, but rather the excess money supply and the growing money supply finding its way somewhere to not even outperform, but at least to preserve its purchasing power, right? And I think BTC is the perfect pure asset, which essentially is like a culmination of that road, right? And ultimately, um, yes, a big part of it is consensus, but more and more people around the world are simply finally figuring out that if you compare BTC to gold, BTC uh, is superior in like 19 out of the 20 variables. And essentially, as of right now, it is slowly becoming like the neo gold of the future. And I think in the long run, if we're talking a couple of decades, it's going to absorb that excess demand that initially went to stocks, bonds, real estate, not to mention bits and pieces of fiat demand itself. And I think once BTC is like 10 times, 15 times bigger than it is today, which I think is going to happen over the course of the next 2, 3 cycles or whatever, people are then going to start comparing not BTC to gold, but then eventually they're going to start comparing BTC to fiat as well. And essentially, a very simple way to think of it is it's essentially two buckets. And right now, the BTC bucket is, I believe, like 2 trillion or something, right? And the fiat bucket is like roughly 100 trillion, depending on which monetary measures you look at. And I think what's slowly happening is simply like the water is flowing, the water of value, so to speak, is slowly flowing from this giant bucket to the smaller bucket. And given the fact that BTC is simply a superior product when it comes to kind of like monetary or store of value properties, it makes it a much better vessel for simply holding. And as more and more people are coming around to the things that I'm describing right now around the world, I think this transition is simply going to continue to happen until the very, very end.
And it's interesting because there's kind of two forces at play. There's the, let's call it the monetization slash adoption of Bitcoin. More people, they find it, they understand it, they start to think about it. But then you've also got the demonetization of other assets, right? And we're seeing that, bonds is kind of the easiest one to poke a finger at, because bonds, we've seen that there has been a desire to actually flush them on the margin. Central banks are buying less of them because, freezing reserves and, they've killed it with interest rates. And there's all these elements where you're actually going to get demonetization. And one of the examples that always stuck with me, if you've got real estate somewhere in the world and suddenly the government goes rogue, well, that real estate can lose its purchasing power almost overnight. So it's one of these assets that is globally accepted. You can transfer it everywhere at any point in time.
Yeah, exactly. The way I see it is there's like a certain amount of quote unquote monetization demand, and it's kind of moving between asset classes. And the way I see it is there's no reason for BTC to take 100 trillion or even more of that in the future, right? So
Yep.
the way I describe it is, you know, um, if fiat is $100 trillion, but it's an inferior product at the end of the day, then I see no reason why BTC can't be 150 trillion, 180 trillion, or whatever, right? So I think that's our long-term future here.
Interesting. So one thing that I really wanted to touch your brains on, because when we talk about time, right, how long it takes things to play out, so often when I'm writing the newsletter, I get comments about, oh, hang on a second, why are we getting ETF inflows and the market doesn't go up? Or why do you have good news and the market goes down? I know you've got a lot of experience. I was talking to Dave Puell when we were in Mexico. He and I'd put in the bucket of analysts, right? We analyze the big picture. We kind of put all the different pieces together. We develop a thesis. I think you've got a lot more experience on the trade execution side of the equation, which is actually they're kind of two different things. And in trading firms, you actually have analysts and executors on two different sides. I'd be really curious, just to like a lot of people who are listening, they want to understand what the hell goes on down in the order books, right? And why does the market move the way it does on small time frames? And we can look at this thesis and go, Bitcoin's going to monetize, and people can't quite understand why it doesn't happen immediately, right? You've got this idea. Why don't people understand this? But down on the small scale, the hours and when you've got these trading regimes, why is it that the market is so erratic and sometimes just doesn't price information in, but then Bitcoin goes on these repricing journeys? I'd just be curious to get some insight on what it's actually like down on the small scale that a lot of people probably don't see within the actual trade execution and the trading behavior.
Yeah, I think in order to understand this, you need to look at who the different institutions or personalities or archetypes on the buyer side, and who are the personalities and the archetypes on the seller side, right? So on the buyer side, you increasingly have kind of like retail BTC people that are gradually DCing in. You obviously have your short-term traders, speculators, and prop funds, etc. And also on the buy side, you obviously have increasingly institutions that are buying, whether it be indirectly through ETF or directly for kind of like personal custody. And the number of all of these people is steadily growing. And on the seller side, you obviously have OG Bitcoiners. If you are up 100,000x, and these people have been holding since 2011, 2012 or whatever, it is not irrational. Even if that's like the majority of their portfolio, right? They need to occasionally convert BTC to fiat nowadays in order to like buy real estate or diversify into other asset classes if that makes them feel less anxious, or just to like travel day-to-day expenses, right? And this is, I think, totally normal because ultimately, if we do want BTC to become more decentralized, we do need those like early buyers, early holders, cypherpunks, etc., to be gradually selling to institutions who are going to take this asset from 2 trillion to 30 trillion, right? And I think that's totally normal. Obviously, as the meme goes, you want to, well, once you buy, you don't really ever have to sell because we believe that BTC will be kind of like the backbone of the global economy in the future. But, obviously, there's also like high frequency trading firms, market makers, etc. And I'm sure there's like some kind of like small cartels, cabals, whatever, trying to manipulate like on super short time frames. But personally, I don't think it matters. What matters is the medium term to long term. And as we know, on top of everything that I just described, BTC also has these like momentum effects, right? Whenever there's a new high or whenever there's a particularly big green candle, people pile in because they either feel FOMO or they believe they're speculating that it's the beginning of a new trend, or they were not positioned, now they suddenly need to position overnight. And these are the reasons why you have these sort of haphazard price moves in BTC.
So how would you, because you obviously been spending a bit of time thinking about how this market trades, would you kind of describe really, let's just say 2024? We've really, I mean, I've been calling it this chop solidation range for 7, 8 months. And now we've just had this unbelievable green candle. We're recording this on the 12th of November. I think we've just had the biggest daily candle ever, 8,500. How does that, like this expansion concept, why is it that the market can be held in such a narrow band for 7 months and then the thing just reprices? And Bitcoin's kind of special like this in that it does reprice and it can go in both directions, but we usually see it on these just enormous wicks to the upside. What's the actual mechanic of this kind of build up of sideways price action and then it's like someone just takes the foot off and the thing just goes?
Yeah, so I think of it very simply. I think the move from 20K to 70K initially that we saw late 2023, early 2024, that was ETF and everything about it being priced in. So that's essentially an upgrade in the valuation of BTC as an institutional asset. And then the subsequent 7 to 8 months that you're referring to, I look at it very simply. I think that's simply OGs selling to institutions. And since BTC is now at 88,000, it means that the demand by institutions has finally overpowered the supply that the OGs could offer, right? So I think OGs wanted to take some profits after holding for many years. Maybe some of the original cypherpunks thought that for some reason, they thought that it either marked a top or there's going to be consolidation would last for longer. So they were essentially gradually selling in the early parts of 2024. Maybe some of the macro dynamics, a lot of people have been calling for a recession or whatever in 2024. That might have spooked some of the speculators or even institutions that have been positioned before the ETF. So they were taking profit also. But ultimately, as we're seeing right now, that was simply reaccumulation, right? Since BTC is now flirting with 90,000, we can say with a high degree of confidence that the first 8 months of 2024 was reaccumulation.
Yep, no, I would broadly agree with that. And when I was looking at on-chain data, you'd see fairly large realized profits, old coins coming back to life, and it was somewhere in around September, it just tailed off. And you could actually see that this sell side by these, guys who are in profit. This is what I love about on-chain data. Your coin is either in profit or it's not. It's either holding a lot of profit or it's not, and it's old or it's not. And you can't fake that. And we were just seeing so many of these coins coming in. they tape it off, and within a handful of weeks, we start moving higher again. So that was definitely aligns with my view as well. Mate, as we as you kind of see the market structure evolve, I think that the thing that's been really interesting to me, you've got obviously the election is a big shift, but there's been this kind of, I think for many ways the election in the US it's more of a societal thing as much as it's a market based dynamic. Going into it, we really had this kind of financial nihilism. This has been a real big theme. I know Travis Kling's talked quite a bit about it. This kind of inflation just degrades life. People start to think differently, like low time preference. The kind of the preference for gambling starts to creep into things. And I think a lot of people look. I know you've been looking a lot at the meme coin environment, and I think a lot of people listening, they're going to be Bitcoiners who kind of understand it, but probably aren't too deep in the weeds. But to me, you can put it in that financial nihilism bucket, but then you also have on the back side of it, we've now got a less regulatory hostile environment in the US. It kind of makes sense. There's been a bit of a tipping point, but I think the Trump effect is also societal as well. There's a bit of a shift away from the too much of the woke ideologies, and like there's been a shift in this mindset. How do you think this kind of transition plays out? What do you think the role is of Bitcoin in that maneuver? And then how does that kind of memetic cycle play through from the left side to the right side of that event?
Yeah. So the way I see it is there are essentially four energies that are driving the valuations of all crypto assets, right? The first energy, it's kind of like monetary, it's HODL demand, it's store value demand, and it's low velocity, right? The second is what they call kind of like utility demand, fuel demand, consumption demand, transactional demand, call it high velocity, right? The third is like on-chain cash flows. That's like revenues, that's fees, that's things where the tokens have like an equity-like property, right? And the fourth energy, quote unquote, is things like speculation, gambling, narrative, memetics, community, momentum, all of these things, right? And the way I see it is almost every single asset in crypto, whether it's BTC, ETH, Sol, meme coins, NFTs, altcoins, cash flow coins, etc., right? I think all of them have a different bundle of these four energies, right? And actually, I tweeted an infographic. I think it was maybe 9 or 10 days ago. If it wouldn't be too hard for you guys to show it right now in the final cut, but because that describes it very quickly. But essentially, the way I see it is, what's going to happen, right, is I think the crypto asset class is going to break itself down into four subcategories in the coming years, right? The first is going to be kind of store value, which I believe BTC is going to be the predominant winner in. The second is going to be stable coins. It's essentially fiat on chain, pretty boring, pretty self-explanatory. The third is going to be cash flow coins, and that is coins that produce some kind of revenue. They pay out the revenue to the stakeholders. We have centuries of history of how to value that, etc., right? And the fourth, I think, is going to be meme coins. And what's happening in the industry right now is for the past 10 years, altcoins, they didn't really trade on the basis of their revenue or on the basis of their utility. They traded on the basis of kind of memetics, narratives, speculation, etc. And a lot of kind of tech founders, VCs, etc., they took advantage of the fact that a lot of retail around the world, they mistakenly thought of tokens as like quasi equity when it's obviously not. It's just a loose token that's attached to some piece of software. And a lot of people have been kind of exploiting that at the global scale. Now, a lot of people mistakenly think that meme coins are degeneracy. I actually think that meme coins represent a purification of the space. And I think they're much more BTC aligned than altcoins are. And I'll explain why. What meme coins are doing is they're essentially stealing the community narrative, memetic, speculation, belief, etc. They're stealing those energies away from altcoins, and they're going to continue to do so, which is going to make it much harder for kind of the tech founder, VC, market maker, supply chain complex to continue kind of exploiting retail, because now instead of these kind of tech coins that have absolutely no users and have absolutely no revenue, instead of them launching at $25 billion and being gradually sold down into unsuspecting retail's bids, essentially smart retail are now effectively creating their own coins and pushing them. And this essentially proves that all of the 99% of altcoins that have ever existed, they were meme coins all along, pretty much. And the market is kind of finally catching up to that. And so ultimately, I think the difference between altcoins and meme coins is clear, and meme coins are essentially making it much more difficult for VCs to scam, pretty much. And I think ultimately that is very bullish for BTC, because meme coins destroy the altcoin complex. And I think what meme coins are doing, they're essentially forcing altcoins to make a choice, either to become a serious cash flow coin or become a meme coin. But pure meme coins they have much better memes than the tech memes, right?
You have to pivot into it, right? So you don't have that kind of founding story of whatever the origin story of this thing is. Yeah.
Exactly. And so the way I see it is the industry is actually the industry is not becoming more degenerate. I think the industry is maturing, and we're going to have BTC, stable coins, cash flow coins, and meme coins. And I think that's actually much more clear cut and much more kind of proper and organized than all of these scammy altcoin narratives. Because ultimately, I actually agree with a lot of Bitcoiners that blockchain tech, right? The much hated word. There's actually fewer use cases than we're led to believe. It's in VCs and tech founders' interest to be oh, we can do 1,000 different things with this. There's so much, right? But also, at the end of the day, you need to separate crypto, the technology, and crypto, the assets. And there are two completely different stories, and you need to analyze two from completely different angles. But ultimately, I think memes are essentially, they are a vampire attack on altcoins, just like BTC is a vampire attack on fiat, right? If that makes sense. And that's simply what's going on, and I think that's actually maturation.
And when I listened to your talk at Token, this kind of nailed in a lot of things. I've had a lot of these ideas before, but I think this is a really succinct way. It is a bit of a purification in the sense that Bitcoin has been talking about forever, that there's all these tokens and there's a token complex behind it. The VCs, the market makers, the Binance listings, whatever it is. And at the end of the day, there was so much scammy shit going on that Bitcoin has just put everything to the side, right? And I agree that we've basically got all this technology that no one actually wants, right? Solutions looking for a problem. And the memes, the problem is just people just want to have fun and make money. That's just that's really what a lot of people, when you look at the altcoin complex, it's the casino. Essentially, these things are servicing that bucket. But I do appreciate that they're kind of attacking that tech side of the equation. You don't need a developer for them. You don't need to ship products. You don't need a roadmap. You don't need any of this stuff. And it's still in that free market environment. This is why people buy these things. I do agree with that general purification angle. And I also agree with the categorization. I think it makes a whole lot of sense. An idea that I've had, I'm kind of curious on your thoughts on how this plays out for L1s. Because L1s are an interesting bucket, because there's been phases, right? You go through ICO tokens, and then it became L1 season, right? All the Solanas and all these different L1s show up. And for many years, I've separated, let's just use Ethereum for an example. You have to separate Ethereum, the technology, the EVM, the people using L2s, from ETH, the asset. You have to separate Solana, the blockchain, from Sol, the asset. And I think Ethereum for many years struggled with value capture, probably still is struggling with value capture. They've tried burns, they've tried proof of stake, they've tried all these things. But I think they haven't quite registered that there's an entire technology complex that they're building. But at the end of the day, they probably haven't quite understood those four energies of ETH, the asset. Curious how you think about that L1 landscape for within your framework.
Yeah. So I literally tell people the same thing you just said, which is Ethereum and Solana, the technology, and ETH and Sol, the assets, they need to be analyzed in completely different veins. So as technology, they're quite cool, but as assets, they are inferior to BTC. That's been my position since 2017, and it continues to be my position today. So here's the way I see it, right? Essentially, Ethereum got quasi monetized because in the 2016-2017 wave, you needed to hold ETH in order to participate in the ICOs. Very simple. And that kind of quasi monetization continued in 2020, 2021, because again, you needed to hold ETH in your wallet in order to participate in DeFi, yield farming, metaverse speculation, NFTs, Ponzi's, etc. Right? So whether you like it or not, you can view Ethereum, the technology, as a borderless country, and then ETH, the asset, is essentially the medium of exchange / unit of account in that country. And because a bunch of it gets left over in people's wallets, and there's some speculation regarding the activity, it kind of starts to get some very like slight store of value effects as well, right? That's kind of like how it works. Solana is undergoing a similar monetization right now because you need to buy Sol in order to gamble on meme coins, right? It's the same exact story all over again, right? And the way I see it is, you know, Sol has been outperforming ETH over the past year and a half because people have been gambling less on ETH and gambling more on Sol. Gambling demand, I think, is the biggest driver of these things, right? But I think these are all kind of like intra-cycle or maybe a couple of cycle type of dynamics. And ultimately, long term, I believe BTC dominance goes to like 85%.
I mean,
That's
and
what I
that's
think is going
just
to
to
happen.
touch on that. I kind of agree with that because we've just seen 60% get hit, but we have to remember that 60% in 2024 is probably like 65, 67% back in the day because you've got stable coins now. You got to remove all those things. So when you actually look at like, it's actually quite remarkable that we're 16 years into this experiment and Bitcoin is still achieving a super majority of dominance, even at this point in time. It kind of shows that we just haven't really got that much to show for all the VC dollars that are poured in.
Yes, exactly. This is exactly what I meant by crypto has fewer use cases, especially if you isolate the tech and just focus on the assets. Like there's only a few kinds that need to exist, right? And yeah, like I said, I think BTC dominance is going to 85% over the long run. Obviously, it's gonna be like a sine wave, gonna go up and down. But ultimately, I mean, here's the thing, right? The only way for ETH to become valuable is if it's viewed by the world as like the silver to Bitcoin's gold. The Ethereum Foundation, they fucked up a little bit, excuse my French, because they started focusing on like um like the revenue side of it, the cash flow side of it, the burn side of it, like the blobs, the data availability, etc. Right? But and on top of that, some of the Ethereum Foundation leadership is like, oh, we don't view ETH as money, or we don't care about DeFi, blah blah blah. But ultimately, like every Bitcoiner knows that if ETH isn't going to become like money, then it's essentially worthless. Why? because no matter how good or fast the tech is, and Bitcoiners have been saying this since like 2017, by the way. No matter how good the tech is for ETH or Sol, if if their own leadership is not trying to make it money, then like both humans and AI agents operating on chain in the future, they're gonna just go BTC, use ETH quickly as fuel on the one end, and then whoever receives that ETH on the other end, whether it's a miner, builder, whoever it is on the other end, they're just gonna quickly go back to BTC or fiat, right? And so if there's no holding demand is what makes prices go up over the long term, right? If there's no holding demand, which can only come if it's like the silver to BTC's gold, then no one cares. And some people say, oh, it's like a commodity. It's a fuel, it's like oil. But, you know, I don't think that metaphor makes sense, because when you burn oil, it actually, kind of like disintegrates, right? But with ETH, like it's just going to increase the velocity so much that I don't see why people would hold it, right? So this is why I'm a Bitcoin maxi when it comes to like the store of value coins.
Yeah, no, I fully agree. I think this was like John Pfeffer's piece way back in the day. There was an article that he wrote about this utility demand, and it's just not really enough to sustain these things, because you're right. You basically, you know, I don't store petrol at my house. I go and fill up my car when I need it, and the value comes from me actually getting rid of it, ironically enough. And I agree. I think when you look at many of the challenges, and I'm sure Solana is going to go through this as well, as you said, just one step behind. And if you can actually wind this back one more step, I've often used the original launch of Binance, and you could almost argue that 2017-16 exchange complex. That was Bitcoin. Bitcoin was the ETH in that environment. You had to buy a BTC to punt on shitcoins. It's the exact same concept. And I was talking about this the other day. You've got the exchange effect in 2017, demand for Bitcoin that they trade around the inside. 2021, we had GBTC, which is a one-way trip for Bitcoin to go in, and then it's trading around the inside. In this environment, and then, stablecoins came into the mix, and that removed that need to hold Bitcoin, and you could argue ETH, you could argue Solana. Stablecoins became the quote currency. And one of the metrics that I've looked at for many years has been the realized cap, and you can look like a 30-day change. You can see when people are taking profit, which is obviously someone buying, or taking losses. And there's this beautiful chart where you can see the waves of demand for BTC, and then later in the cycle, there's a wave of demand on the Ethereum realized cap. And then at the end of that cycle, you've got the wave of demand for stablecoins, the quote currency for everything else. In this cycle, that has broken down. And I have heard so many institutions, traders who were long ETH from the FTX event, expecting the classic, oh, well, Bitcoin will go and then Ethereum will go. We're in an environment where the cycle, I think, is going to be very different from this regard. How do you envision that kind of cyclical capital rotation? What do you think that looks like over the next, let's say, 12, 24 months?
Yeah, this is what you're describing right now is exactly why I'm telling everybody to buy BTC and memes. Essentially, we are skipping all of the bullshit in the middle. I think here's the thing, right? What I said to you in my last response to your previous question, I've been saying the exact same thing in like the middle of 2017, and it just takes years for people to kind of like understand this and the markets. It's like markets, like they move slower. You know, like when you move together with 1,000 people, you move slower than when you run alone, right? So that being said, I think people are realizing that BTC is the superior store of value. ETH can, here's the thing, right? ETH, it cannot compete against BTC in terms of gold-like properties, and it cannot really compete against Sol in terms of like degenerate use cases, quote unquote. So that it's kind of between a rock and a hard place. I do think it's going to have pockets of outperformance versus Sol here and there in the next 12 to 14 months, but that's totally fine. And ETH might even hit 10K, who knows? But at the end of the day, if I was going into a coma for like 25 months, I would rather hold BTC, if that makes sense, right?
Mm-hmm.
On the altcoin side, um, and last thing about BTC, it's becoming apparent to like serious institutional investors and even the market consciousness as a whole that Ethereum and Sol are unlikely to compete against BTC in terms of like the store of value use case. And Sol was faster than ETH. There's also going to be some number 4 that's faster than Sol. There's going to be some number 5 faster than number 4. It's never going to end, you know? And by the way, when it comes to altcoins, right? Even if we get rid of the scams, and if we even look at the legit altcoins, right? By legit, I mean altcoin projects that produce revenue, right?
You could
Like,
argue that if Trump does deregulate things, you could argue that there's a pool. Let's just, for argument's sake, take Uniswap. If it continues to do the kind of historical volume it has done, and they turn on a fee switch, there will probably be serious cash flows there, like actual genuine revenue, which can be priced on a typical TradFi model.
Yeah, exactly. However, there's two things to note here. First of all, I think a lot of the even the legit cash flow altcoins, they have been delaying or avoiding providing cash flows to holders. Maybe Uniswap is not the best example, but for most others, I believe that to some extent, it's kind of against their interest almost to give out the cash, or they want to delay it as much as possible, because when you give out the cash, you kind of lose the Memetic component. And a lot of the stuff in crypto, which even the coins that do make money, the Memetic component is still 4 or 5 times bigger, if that makes sense, right?
It's the Cardano effect, where it's like, if I just keep telling you there's something coming and I never actually ship anything, you always, oh, don't worry, it's coming. The moment you ship something, now you got a product and no one wants it.
Exactly. So that's the one thing, right? That's short to medium term. I think more medium to long term, here's the thing, right? AI is going to keep improving very, very rapidly in the next 10 years, 10, 15 years, right? And my view is AI is going to commoditize absolutely everything that's open source, or like big parts of it, because as we are already seeing in the last year, the code, the time, and the skill it takes to build kind of code bases, especially in an open source context, they're going to keep collapsing to almost zero. And I think you're going to have 100x, 1000x engineers, so to speak, quickly forking, battle testing, and hyper optimizing all of the open source code bases that take any kind of fees, which means that the moats for any kind of revenue generation on chain is going to continue going down. And the original vision for quote unquote blockchain tech was to build a world without middlemen. And I think that's eventually what we're going to see. I believe that most of open source software, it should be free or almost free. And that's why the profit margins of on-chain projects, they're going to keep collapsing. And that is going to keep accelerating. So you have to ask yourself, what are the remaining quote unquote moats in a AI heavy, machine heavy world? And I think this is where things like belief, faith, liquidity, Lindy effect, community comes in. Essentially, in the machine world, the things that are going to be trading at a premium are going to be things that are biological, if that makes sense. And this is exactly why I like BTC, and this is why I like memes that have like BTC-like culture, and essentially because those two things, they are essentially cults, and they don't rely on either revenue or technology as much as they rely on human behavior and human faith and kind of human game theory. And just for the audience, so meme coins, they are kind of separating into two subcategories right now. On one end, you have like your pump fund shitters and short-term gambling. and obviously almost all of that is going to go to zero. But on the other hand, you have, I think, like 5 to 15 coins that, for lack of a better example, are trying to become the next Doge. And Doge has proven that it can survive cycle after cycle after
It's
cycle.
basically at all-time high as
Um,
we speak, I think.
yeah, it's getting there. It's getting there. And essentially, um, that's the part of meme coins that I'm interested in. Essentially, coins that are more like tokenized communities that are trying to be something or do something for the long term. And yeah, this is why the BTC and the meme coins bucket, I think, is going to be the theme of this cycle.
It's fascinating because at the end of the day, right? I mean, there's going to be a lot of Bitcoiners who are like, "Oh, it's all just gambling." But I think, to me, why I find this so fascinating is we're watching. I mean, when I look at how Ethereum and Solana, they try to do the finance side. They rebuilt Wall Street bug for bug. It gives you a lens into how things got to be the way that they are today. And if we're looking at this memetic thing, you're basically looking at human behavior patterns. And ultimately, that's what on-chain data for me, that's why Bitcoin is so interesting. And when you look at on-chain data for Bitcoin, very clean, the signals, they make sense, they're based in human decisions. If you look at the on-chain data for altcoins, you see the team moving their vesting schedules, and like it's very unnatural, it's very unclean. The data really doesn't have the signal that you're looking for because it isn't that just pure memetic scarcity and human beings responding to it. So I think it's a really, really interesting like lens into how people think and what human behavior patterns are going to be.
Yeah, for sure. And I believe that you may be running an analytics website for BTC, right? I think there's an actual opportunity to apply most of your metrics for meme coins, and you can clearly see which ones are kind of like centralized and pretty much owned by 5 people, and which ones are decentralized with like 10,000 organic holders. And you can see the diamond-handed ratios, how hard they believe, what's the average investment ticket, how decentralized it is, etc., etc.
No, I fully agree with that actually. And I think about, because at the end of the day, why can we spoke about Ethereum and ETH, Solana and Sol. Bitcoin, you don't have to separate those two because the only purpose of the Bitcoin blockchain is to move BTC around. If you think about the memes, right, and my audience will know what these mean, but MVRV and SOPR and these kind of metrics that describe how in profit or loss the average investor is, memes, whilst they don't have the blockchain component, their only job is to just be the token. They're not going in and out of treasuries. They're not going in and out of money markets. They're not doing any of that shit. They're just buying and selling. And because of that, those metrics which describe profit and loss, the ultimate incentive for all of us, they're probably going to be very clean. So I actually agree with you. I think for memes, these metrics will actually work. For once you go down to the tech alt world, you've got to factor in so much shit, and most of these metrics just don't have any signal whatsoever. So I fully align with that. That makes sense.
Yep, agreed.
Mate, so as we kind of close this thing out, I'm curious, what do you think? Because I've heard you talk about this cycle. We've had really, it's been Bitcoin dominated and memes. The alts and everything in the middle has just not performed. What do you reckon this market looks like? Let's roll this cycle. We get close towards the end, or maybe once whatever the macro top gets put in. What does this market look like, kind of post cycle? Right, obviously BTC dominance likely to climb, but what do you think the landscape broadly looks like if we wind the clock forward?
Yeah, so I think it's like I said, I think altcoins, uh, they're they're gonna be like, I don't want to say bearish, but they, even if they go up, they're not gonna go up as much as in past cycles. So that's first thing. Second thing is I think meme coins are going to go to 1 trillion. That's kind of been my thesis. Right now, I believe they're, I don't know, 70, 80 billion or something, including Doge. So my view is that meme coins are going to go to 1 trillion, and it's a function of uh, people trying to find this Bitcoin-like journey. But a lot of the young people, they were like 13 years old when BTC was like having its previous bubbles or whatever. So I think meme coins are the new altcoins essentially. Meme coins are the new altcoins essentially, and the way I see it is BTC dominance is going above 85%. I think there's going to be fewer altcoins overall. The altcoins that survive necessarily need to become cash flow coins, and then meme coins are going to become bigger. That's kind of like my view on things.
And how close do you reckon? Last question: how close do you reckon Bitcoin gets to gold in this cycle, or in the next, let's say, 4 years?
What's the BTC price equivalent for gold price right now?
It's just crossed over. Literally, as of today, we've now got 1 kilo of one BTC will buy you 1 kilo of gold, and market cap parity would be 10.8 kilos. So we're about 10%.
What would be the market cap parity for like what's the BTC price for us to cross the gold market cap?
I think it's about 650K. I think it's in that ballpark.
Okay, got it. Got it. Yeah, I think we are gonna see somewhere between 150 to 220 this cycle.
As in dollars.
Yes.
Yeah, no, that more or less aligns, and I think at the very least that will be a point when that's where my instinct tells me that we're more likely to have some kind of a let's call it more than a reaccumulation, some kind of hey, do we belong up here? Maybe not. And something that I noted today, and I've been talking about it quite a bit recently, is in 2021 we attempted to be $1 trillion asset twice, and we got rejected pretty savagely. We've just spent 7 months proving that Bitcoin belongs above $1 trillion, and every single dip was bought pretty significantly. So to me, and then you rocket higher from there. So I think that's really telling us we're now in the $1 trillion environment, and that's really a flaw from here. Mate, thanks so much. It's been a really, really insightful. I can see this. It's kind of stitched together a lot of ideas I've had about how alts have played out and why, in many ways, I have no edge in alts, but I really enjoy the social element. Why are people making these decisions? How does the market structure evolve around these ideas? So I've definitely got a lot from this. Mate, where can people find you and keep track of all your work?
Yeah, so I'm on Twitter at muststopmurad. And just a final word for I know most of your audience is Bitcoiners. Probably most of them hate memes as much as they do alts. But just a word of not advice, but a tip. If you are going to dabble in meme coins, all of my meme coin strategies have actually been kind of motivated by my learnings in Bitcoin literature and Bitcoin community. And essentially, my theory is that the meme coins that are going to end up becoming the biggest are going to be meme coins that are most similar to BTC, whether it's culture or ideology or on-chain behavior, right? So I'm looking for meme coins that have BTC-like culture of like hodling, diamond handing, kind of like DCAing, evangelizing, etc., right? And that's kind of that's been my whole thesis.
And just to kind of point to that, I mean, I have absolutely no edge, and I don't own any of these things. But the one that I saw you talking about was SPX 6900 or something like that. And I was like, just simply the idea of like it could be as big as the S&P 500, and just the insanity of like people trying to do that. Right? It's the same energy as like Doge to $1. I can see why people just gravitate around this like simple, stupid. We all know it's a ridiculous idea. But if enough people believe it, sometimes stupid things happen.
Yeah, exactly. It's similar to some of the dynamics in GME. That's why we refer to it as kind of GME 2.0. But this time around, they can't switch off the buy button or print more shares. So there's a lot of that. When it comes to meme coins, it's essentially tokenized community, tokenized ideology, tokenized protest, you can say. And a lot of people emotionally resonate with that. So it's almost like voting with your money.
Fascinating. Mate, thanks so much for coming on. It's been a real pleasure.
Totally. Thanks for having me, man.
Cheers.